Alright, so for this week, it's Sunday, July 23rd at 5 p.m. So, we're gonna just talk about, just look at the future for a second. See if it shows anything new here. And we're gonna, while that's loading, we're gonna pull up Nasdaq. And it's not loading for some reason, CNPC. Anyhow, okay, so here we are. Futures almost flat, or down a little bit, $76. 10-year yield is at 3.83. So the biggest news for this week is gonna be earnings news, right? So we're gonna have lots of reports this coming 3 weeks. And then we're gonna have Fed talking about the economy and stuff, and market is expecting pretty much a rise in quarter point, and then it doesn't expect any more rate after this. So that's the market expectation. So unless they're gonna say something stupid like we're gonna raise another time, like for sure, then the market will probably react negatively. But if they're just like, oh, we're gonna wait and see, and because the next time is gonna be about 2 months away in September 20th, so that will be quite a while away. So as long as they don't say anything like crazy, too hawkish or anything about the rates and stuff, then I think it's fine from that perspective. Any questions about that? Any comments?
No, sounds good. I was not knowing that it's after two months, so that's good. So
yeah, so there's a 2-month period, like pretty much they're gonna have 2 months more data to decide what to do in September, right? Or even for later, right? So so right now it like I said, it's pretty high, 85% in September, no rate hike. November 70%, December 65%, no rate hike. So there's no decrease because last time they already said they're not going to decrease. So the question is more about like, is this it? Is this the last time they're going to raise rate, right? So that's what the market expecting now. So I think the rate issue is less of a problem. The other thing I want to just go to inflation. I don't know if you follow inflation, but these guys, they use real-time data, right? So right now it's at 2.33% in terms of inflation. And the last time CPI data report 3%, right? So but that one a little bit still lagging, So you can see it's already down from a lot to like 2.23%. So that from an inflation standpoint is pretty much not a big problem. Okay, so the other thing I want to look at is the investment survey, right? Like, because where are the people, like, are they really bullish? And this is 51%. It's the highest bullishness, right? In a year. I'm not sure what's the peak, like, but I think 50% might be pretty high. You see from last week it was 41, it jumped 10 points. That's pretty significant. And then the prior week was 46, and then 41 again, June 28th. The bearishness is definitely the lowest. See, like we went from 27 to 24 to 25 to 21, and bearish high is okay. So it doesn't say what's the lowest bearish, but yeah, like it's definitely pretty. Lots of people were bullish. I think 50% is pretty high. And then the CNN greed index also now extreme greed. So I don't know. Every time you reach extreme greed, they tend to drop usually. So I would be a little bit more cautious here. It's still holding, but I don't know. So that's one thing. We can also look at see here secondary indicators. can also look at the, I think, yeah, let's look at Nasdaq. Let's go to daily chart. Okay, not this one. Nasdaq daily. Okay, so I'm gonna narrow this here. So here, like David Ryan talks about this. Even last week, I think he talked about this. Like, whenever the oscillator for short-term overbought oversold, like whenever it goes to 500, it tends to be near the top. At least, you know, due for pullback correction. So we did hit, you know, you can see here, you know, I don't think can I draw this? Yeah. So here, you know, a week and a half ago, like we kind of hit almost 500, and then, you know, just this week we hit definitely past 500. So so that's something to watch out for. Overbought this one. Okay, 10-day moving average volume. So it's still the blue, yeah, blue is the one that's moving up. So average volume still good, and then the selling volume is rising. Okay, a little bit. Okay, and then we have the average new highs, still near the top, and then the lows, new lows, still decreasing. So far these are looking okay. Okay, so those are okay. Yeah. All right. Let's see. Okay. So this week, I'm just gonna look at my notes here. So Dow take market leadership. It's been lagging for a long time, but it ran up to a 15-month high Friday. Right, riding its longest streak since 2017. So let's look at Dow first, because that seems to have taken the lead now. And you can see the RS line. This is against S&P. You can see how sharp it has gone up, like against S&P. Like that's significant. So now Dow has taken the leadership, and you can see it's 10 days up here, and the slope is pretty strong. Not sure, you know, whether this will continue or not, but this is definitely like pretty strong slope. So usually when they go up this strong, they tend to fall pretty hard. So that's something to be aware of. So that's Dow, and Dow obviously broke all the recent highs here. So let's look at the weekly chart. So it's 35492 was the last, you know, last year. Did it break that? 35? No, it's near it. 35227 right now. Yeah, it hasn't broke this high. I don't know why this straight line shows that it broke it. That's weird. Anyhow, yeah. So it's getting close to it, but not quite. Still 200 points away. Obviously, you can do that with another day's game or something. But yeah, so this has climbed a lot. And this week I know a lot of Dow components, like stocks, will report. So that will determine whether it has more steam or is it all priced in, right? So that will be important for Dow, because it's the one because you know the reason why I think Dow is important to look at is because not only it has taken the leadership in terms of relative strength, but it's also you know, it hasn't fallen, right? Because if we go look at Nasdaq now, it has started to, you know, reverse. So that's never a good sign. And volume is there, right? So I would be a little bit more cautious on this, right? Yeah, let's look at the daily chart. So here you go, right? We have 2 days where it closed at the bottom now. And then again, both days are distribution days, which means there's higher volume selling. So again, we're not that far down yet. We're near 14,000 level. But if it does fall more, it will fall really fast. So like I wouldn't be surprised to hit 50-day very fast, especially with so much earnings coming up, right? So any bad news could really trigger this. Any question on Nasdaq?
No, sounds good. No.
S&P is again, we have Dow on one end going higher, and then we have Nasdaq starting to drop, and we have S&P kind of in the middle. You see, it's not quite the 10-day, but it's not quite the high, right? So it's kind of like in the middle range. So this one, it's still looking good, just like Dow. It's still looking good, but things could change very fast if things don't go well from the earnings perspective. So again, we have 3 different stories here happening, and then we have Russell. Let's look at Russell here. So Russell, again, same thing. Russell went up a lot, right? Like from a relative standpoint, it's kind of hard to see here. Yeah, it's been going up, and then again, the last 2 days has fallen. Why is the volume doesn't show? That's weird. What the heck? I don't know where the volume bar went. Anyhow, yeah. Anyhow, yeah. So I don't know. Yeah, again, this one is not quite a 10-day yet, so that's still okay. But yeah. So that's again. It's looking pretty good, Russell. It's probably, in terms of slope, this is probably the strongest one. Stronger than Dow and stuff. But, obviously this is the one that is like playing catch up, right? Everyone's near, closer to the high, whereas this one is still, at the bottom of the range, from peak to trough of the huge bear market. So obviously this guy has a lot of catch up, and I think like we talk about this during the week, like banks doing really well this week, right? They went up a lot, so that's 2 weeks in a row now, so 4%, and then this week was 7%. Like, and what's interesting about the banks are like even some of them, they didn't report that good, the numbers, and they still went up. So so it's almost like the market just want to go up for the banks. So so this is regional bank. And then KBE, which is the bigger banks, same thing, right? So, yeah, like, I'm just gonna go to my other. Just want to quickly see, since we're talking about banks right now, like Bank of America reported, Morgan Stanley, Goldman Sachs, right? Yeah, Bank of America. Yeah, see how big the weekly gain is, 9%. And now it's at 200-day, right? So that's a huge jump. And then Goldman Sachs, same thing, right? So now this one broken 200-day line. So now it's pretty bullish pattern, this guy's. And then Morgan Stanley, same thing. See, so these are really bullish pattern, especially on such a big weekly run, and then high volume come in. So, and this is a cup building the right side of the base, and so this is very bullish from a technical perspective. And then so those guys are really moving. And then we have regional banks, USB. Wow, look at this. It's like two giant week right here. That's a lot of gains. Yeah, 8% this week. And then Western Alliance. Okay, yeah, same. So this one. So you see, even this one, like it didn't move much last week, and then it broke out this week, like up from this right here. So it's still facing the 200-day coming down, but it seems like when you look at the whole, it seems like they're already in the uptrend mode, despite the 200-day coming down. So that's really good news for the banks. So the banks are finally able to join the rally, right? So like if I go to my accumulation, you can see the banks like during the whole week, like the financials, like they've been accumulating for like almost 2 weeks straight now. You can see that even this week is the strongest group, strongest sector. So and a lot of them are still really low, right? Like really, because they all corrected so much. So coming back to KRE, like we are not even halfway, to this. Yeah, this is like the top is right here, but even if you count from here, we are not even close to halfway, right? So from here to here, it's not even halfway. We still have a long way to go. So, but if they're gonna recover, yeah, it'll be a good sign for S&P in general, because there's lots of banks in S&P, and also lots of small caps in Russell, right? Those two. Yeah. So that's the banking. Like overall, they're doing pretty well. Like, I think some of the growth stocks, like like Four, you probably know Four. I think that one's trying. Yeah, this one is still in the base. It hasn't quite broke out yet, but it's moving up slowly. It's having trouble though. It's not as bullish as the other stocks. I don't know why. But it's still going, on the right side of the base now. Yeah, let's look at Zion. Zion is a regional bank. Again, it went up quite a bit this week, so it kind of broke out there. ACGL. Yeah, this one broke out. Insurance Property Group. Nice clean breakout. And on high volume, look at that volume. So usually on breakout like this with strong volume, we would probably easily see a 20% gain from this breakout. KNSL, another insurance guy. Again, this one has already been on an uptrend like for a few weeks now, and just slowly grinding higher. So that's good. Prime. Primoris. Yeah, so this one, same thing. It's like the 50-day is moving up at a 45-degree angle. Yeah, so those are the few that are doing pretty well. Charles Schwab. Okay, let's look at Charles Schwab. SCHW. I think, was there some news, or did they just report? Yeah, they report. Yeah, look at that. Like, so strong. Volume. Yeah, now the 50 days is like even above 45-degree angle. So the banks are doing like probably the #1 sector this week. Yeah, any questions on the banks?
No. Can we look at JPM too?
Oh yeah, JPM. Yeah, JPM is good. Yeah, JPM now you can see the slope line is like 45-degree angle at least. So really strong. 2 weeks. Look at the volume. 2 weeks of giant volume came in. So yeah, I wouldn't doubt this stock. Like most likely will hit 20% profit from this breakout right here. So yeah, looking really good. Again, the banks are doing really well this week. Let's see, do I have other banks here? But yeah, those are the good ones. Any other ones? Or? So, I'll talk about this in a second. Golden Cross Russell 2000. Yeah, let's talk about that one. Let's go back to Russell. So this was a bullish signal for the Russell right here. It's probably hard for you to see, but the 50-day is the red line. It crossed above the 200-day line. So this is the black line right here, and then the red line, which is the 50-day, it crossed above, right? And this is let me see. Yeah, it fell right here because it came back down. So here it came back down, and then this is the second time now this year, right? So and this time it came back above and it took off this time. So that's bullish because the first time it fell, even though it fell, but the second time it works this time. It seems to be working this time. Now we're still not at the high we had at the early. That's why Russell has been lagging, right? It's the only index that hasn't made a new high, but we were close. You see, 2067, 100 points away. But I don't know. We'll see. Like right now, it's a little bit extended from the 50 days, so that's the only thing I'm worried is that again it might be another. See, this is where 50 days is pretty far away. And every time it gets too far away, it seems to pull back, right? So here again, 50 day right here. So it pulled back right here pretty hard. So I don't know if it will pull back like this one went even further, right? It not only pulled back to 50-day, it went below it. But that was during the bank crisis, right? We have, February and March, right? So this time, if, let's say a normal pullback, it might go to 21-day. Unless something really bad again, then it might go to 50-day or even lower. But I don't know. I would say at least 21-day if there's a pullback. Yeah, just cause it went so fast, so like, went up so fast, So and this week, you can see a lot of the banks, they just shot up for no reason. Like even some of them didn't report good earnings, they just went up. To me, that's usually almost like a little bit of climatic action, meaning like people, buying for no reason, right? Not good reason. But of course, some of them, like like we talked about JP Morgan, they have good numbers. They have strong fundamental numbers. So and they report good earnings, so that's different. But some of the, especially some of the regional banks, they don't even report the numbers and they still show up like crazy. Yeah. So anyhow, any questions on that? Okay. So
sounds good.
yeah. So if we look at Dow, what's it called? Dow Jones Transport. Let's look at it. I don't know if it has changed. No, it looks still really bullish. You can see the Dow Jones Transport booked to new high this week. Well, new high last week, and this week it actually closed above this resistance. So again, wow, look at this daily chart. It's like strong support 10-day, right? It just doesn't look like there's a recession this year, right? And I think, was it Morgan Stanley? I can't remember. One of the bears came out and said, yeah, there's no recession this year. So the market is in clear mood, a good mood in terms of like there's no recession. So that's good. So that's happening. Yeah, let's look at this one. We haven't looked at FFTY. Okay, so this is the growth stocks area, and Monday, Tuesday, Wednesday was like when the market was still moving higher, but then starting like, I don't remember what time on Wednesday, it started to pull back, right? So Wednesday, a lot of growth stocks reversed. And again, just like this chart, a lot of them even went below Tuesday's low. And then Thursday continued, and then Friday, even though it was a mediocre day, a flat day, but a lot of growth stock continue to go down. So I don't like that action, because why? Because you can see the RS rating, right? It's just the relative strength is just going down really steep. In fact, this one already hit new low compared to a week ago. So that, again, David Ryan always say this, right? When stocks go up, they should go up strong and come down slow, right? It's like, but this is like the opposite. The stocks went up, but then came down even faster, right? So whenever that happens, you need to be aware, because people are selling at whatever cost, right? So and we don't know the reason why they're selling so hard, but that's the thing. When the big guys are starting to sell, usually by the time the smaller guys figure out, it's a little bit too late. So so there's something happening for sure, because the volume is significant, right? And this is the growth, like IBD's 50s index. But like if we jump to say like our Cathie Wood's fund, like, another growth type of fund, right? Okay, this one looks slightly better, because Wednesday it didn't go down. Thursday it went down hard, but Friday it was able to hold. So this one looks slightly better. Yeah. Okay. Any questions on that? So yeah, we just have to watch. If you're holding growth stock, you just have to watch like how is it performing relatively. Because I think, because this earnings season, some of them are going to be, let's just say the whole market going to pull back, right? Like next 2 weeks. Some of them are going to survive, but you don't know which ones, right? And so that because maybe the earnings is going to shock everyone. Say, oh, this is such a good report, right? And then everything goes down, but that stock doesn't go down, and we've seen that many times. So some of the stocks might just growth wise, they're able to grow, and they're going to do okay even during a pullback. But some of them, if they miss, right, and so now I'm going to start talking about like Netflix and Tesla, right? So like, and that's what happened, right? Look at this, right? You had 2 days of gains right before that earnings report, and what happened? It took 1 day to wipe out those gains and more, right? It only took 1 day to wipe out like almost like if you look at this low, it wiped out a whole week, more than a week of gains. And that's significant gain. That's not like little. I think that day it dropped 10%, right? So it just shows to me like, oh, like 8%. It just shows to me like this is what, you know, again, David Ryan always referred to, like when you see a stock giving up gains so easily, and volume is the highest, you see, the volume is super high. Like it means that big institutions are getting out. And when they start to get out, and then the next day it follows through, right? That's even worse. Like there's no rebound whatsoever. It follows through, meaning more analysts want to get out. So this could last a few weeks, right? And you know, in a few weeks, we don't know. It might hit the 200-day line down here. So again, this is the time when you're like, okay, if you have gains, do you sit through the pullback or correction? Because you don't know whether it will turn into a bigger, like, you know, from a 5 to 7% pullback to a 10 to 20, 30% correction. Are you willing to sit through that? And that's the question, you know, every trader or investor have to ask themselves. If you're a longer term investor, probably, you know, you won't sell much. If you are, you know, kind of in between, you probably would sell some. And if you're a trader, you probably have to get out, right? So, yeah, this is not fun. I mean, you know, it's already at 427, and if it breaks 411, which is the last support line here, it's going to go down even faster. So, you know, again, all it takes is one earnings report, and it changes the whole dynamic, right? And then we're going to look at Tesla, right? Same thing here, almost similar. Like if you look at the low of that day, after the earnings report, it wiped out 2 weeks of movement. That is significant. Volume came up. It wasn't the highest, right, in recent months, but still, like the fact that it wiped out 2 weeks of gains, that is significant. And then the next day it followed through again. So, you know, again, more analysts want to get out rather than get back in. That's why there's follow through action. You know, so here we see similar support line here. Again, 240 would be where most people would try to find support, or at least near the 50-day line, which is really close. So somewhere around that. If it can't find support, then yeah, then it's gonna go down to 200-day. So, like, you know, and again, it's all about momentum. And right now, the momentum has shifted, at least for this kind of stock. So we have to be super cautious. You know, I will be selling quite a bit tomorrow morning, because I just don't want to see my gains disappear. Because look at how, like, if you, like, even if you holding Tesla for a while, like, and you have substantial gains, but just 2 days, it wipe out like over 10% of your gains, right? Like, can you imagine what 2 weeks of pullback gonna do? You know, and that's the sad part. Like, you know, I don't want to give up my gains, right? If you're sitting on a 20, 30 or more % gain, I don't want it to wipe out my gains so fast, right? So you gotta trim some, right? Like, you know, and that's when, you know, we talk about like Charles Harris, right? He loves trading around his core position, and that's when you know, if you use that strategy, this is when you actually start to trim some, and then eventually it will bounce back. We don't know where it will bounce. Maybe 50-day. Usually it's 50-day, but if it doesn't, maybe 200-day. And then when it bounces, whatever you trim, you know, you trim a little bit as it goes down, and then again, I don't know how much you trim. Let's say you trim 30% by the time it hit the, or more, 30 to 50%, depending how much you want to keep your core position. Then now you have 30 to 50% extra cash when it hit 200-day. And if it bounces here, that's when you buy a much lower price. So you actually lower your average cost, right? So that's a good strategy, especially for, you know, for a time when it's actually going to pull back. Now, of course, you know, this strategy only works if it actually pull back more, right? If it bounced back tomorrow 10% and you sold some here, then you actually buying at a higher price, right? So you're actually having a higher average cost. That's why you do it in little chunks, right? Like, you know, we're not telling that you shouldn't be like doing big, you know, like do half of your, sell half here or whatever, you know, but you do it in little chunks so that, like, even if you sold 10% already on Thursday or Friday, you still have 90%. And if next week is still bad and it's still going down and you sold another 10%, you still have 80%, right? So, but it gives you that money, that cash sitting aside, you know, to take advantage of the lower price later. So that's what a lot of the, you know, really experienced growth traders will do. And so that's what I'm gonna do, right? Like, I'm not gonna let my gains disappear if this turns into a bigger, like, you know, a bigger pullback, right? I'm not, like, just like you, I don't think it'll hit 10% correction. But just in case, right? If it does, you know, but I have to start trimming now, because if you wait till, you know, next week, it could be worse, you know. So that's the idea here. Any questions on this two stocks?
No, sounds good.
Yeah, like, you know, Charles Harris said, it's like, I think we look at this briefly. Okay, so let me go to the Nasdaq chart for a second, because, you know, I have it marked up here. So here, we talked about this a few weeks ago. Right now, if I count from this low right here, it's actually 20 weeks up now. Okay, because, you know, it made new high 20 weeks, right? So so if you look back, like even during the pandemic rebound, it was 23 weeks up on the first leg, and then this one, it had, I think we calculated, it was like almost 15% correction on the Nasdaq, and then it went up, and then it got tested again, and then from here I count again, it was another 15 weeks up, and then before another correction here. So you know, it's roughly around, like IBD study also show average 18 weeks before another, you know, some sizable correction, like usually over 10% on the index. So it could be now we getting this, right? I don't know for sure, like no one knows for sure, but it's near that time frame, you know. So that's another thing to be cautious, right? So, because, you know, again, psychology plays a big role in where the market heads. You know, sometimes it's not even fundamentals. And then we look at stochastics here. Again, same thing, like it's at the extreme. This is extreme now, right? Like overbought territory. Like the last time it even touched the ceiling, I don't know, right here maybe, right? But like right here, it didn't touch the ceiling. This was March 21st. None of this touched the ceiling. But right here, we're actually touching the ceiling now. And so this was back in 19, a little bit here in right before the pandemic hit. So right here, so this two hit the ceiling. Right now, this is hitting the ceiling right now, and it's been, you know, near the top at almost 2 weeks now. So again, you can see every time you hit that high, it never stays long. It always comes back down. So, you know, so we gotta be aware of this, right? Okay.
Yeah.
All right. So let me take this back out. So I think we talked about those. Okay. So now we're gonna. Oh yeah. So the other. Yes. So, like, yeah. Let's just go to anyway. 1995, because a lot of people think this is 1995. Yeah. So here, this one is a really strong one. Oh, 95 March. Yeah, this is significant. I don't know how, like, it says 39 weeks. Is that right? Yeah, it looks right. This is a significant rally. Anyhow, so we can't really use that. But let's look at 2003. So here's this one. Okay, let me go slightly further. Okay, this one looks pretty long too. Yeah. So again, so I think these two examples, 1995 and 2003, it definitely show longer period of before a significant pullback. So, or correction. So this one only have pullbacks. They don't, there's no like 10% correction. So 2003 and 1995. Those two actually went longer. But they did have a lot of, that's what Charles Harris was saying. They did have a lot of 3 to 6% pullback on the chart. So you can see like when it pulls back, it has a lot. Like it constantly do it. So this one, you know, it looks different. Like, but the duration of the rally lasts a lot longer, right? I don't know if 1995 did that too. Let me go back. This one didn't really do that. Yeah, this one is probably one, but this one is much bigger one, but still. So this one is much stronger rally. It didn't even do that. So yeah, so just like, you know, again, he trades around the core position a lot, so for him it's like, this is like normal. Yeah. But yeah, I you know, even for me, right, like it's not fun to have to trim any position. It's just not fun, because then now you have to think about buying back and so forth, right? It's just like, you know, but yeah, if you don't want to do that, then, you know, you can try to hold on to it. But yeah, just knowing that there's a high chance, right, of you know, pullback now. Okay, let me go back to Netflix and Tesla. So then Ryan was talking about this. I thought it's quite significant. Let me go back, and I think you see it on the daily chart. Okay, let's see if I can see it. Okay, it's subtle here, but you can see it a little bit. On Tesla, I think it's more obvious. So it make a recent high here, and then it make a second recent high, and then it make a new high right here, right? The problem was that, you know, you have higher highs, and then higher lows, and now it broke the lows, right? So when that happened, it's a shift in behavior, right? So that's when you have to be more cautious. So let me jump to Tesla now. So this one is more obvious. One high, higher high, higher high, higher low, and bam, lower low, right? So the behavior has shifted, right? So the uptrend is no longer intact. Now we're on a downtrend. So the question is, no one knows how far this downtrend will go, right? So that's the problem. So, you know, so this one, like the way he explained it, this is like, I don't know. So if not, you know, you don't just look at the 2 days, right, Job? You're looking at the, you know, most recent action in the last month, right? And it has broken that behavior, and because this 2 days dropped even so fast, like it just only took 2 days, man, to break this low. And we're not even that far from this first low, right? And it's just incredible selling pressure, right? It's not a little selling here. This is huge pressure. So that's why it's not good from looking at those two perspectives. Okay, so we're gonna just dive in quickly into like other big mega cap. So Amazon, you can see it still look okay. It's close to the 50-day line. This one, I really like this chart. I feel like this is, you know, pretty good. It's definitely the top one or two. Meta, same thing with this one. These two look very identical. You know, they had this like tight week and then tight 3 weeks, and then it just like, you know, really tight. So I like these two charts the most. Google. So Google, it fell back below 50-day line, and now it's, you know, and this is the sad part, right? It's like this week is very, you know, really good because it bounced back above 50-day, and then this week it fell back below it on higher volume, so that's not good. Even though, you know, it hasn't made a new low, but yeah, I don't know. It's just sad to see so much people want to get out. It's always you know, doesn't mean it won't work. It just, I mean, this base is really tight, so, you know, it could be just going sideways for a while. We'll see. It's hard to say right now. Apple. So Apple chart is also really good. Now, I do want to say one more thing about this, the Netflix and Tesla, right? Both of them are consumer discretionary stuff, meaning like, if you don't have the money, you don't need to spend on it, right? Apple is also a consumer discretionary stuff. So if Apple also report bad, now what does that tell you, right? So it tells you that consumer discretionary is not doing well, right? So it's, just watch out for that, and that could spark a bigger, potential pullback or correction. Because if people are not spending as much anymore, that tells you a lot about the current economy, right? So something to watch out for. No one has, coming to any conclusion yet, but just, look at Apple. There's just blue volume everywhere. So, like from the chart, I can tell there's a problem, okay? But like I said, earnings report can be a big dynamic change. So we have to make sure that this doesn't impact Apple as well, right? So anyhow, I just want to mention that. Yeah, so we can go to Microsoft. So, again, I just don't like seeing this. Like, this volume is high. Like, this volume is really high. I just don't like seeing those huge volume. Yeah. Like, I think they will beat their earnings report. And they'll probably guide, something about their AI stuff too, right? So like NVIDIA, like Microsoft and NVIDIA, I'm less worried because they have AI support. Same thing here, huge volume. Like that was a tremendous volume. And it's a reversal, right? Now, yeah, but again, NVIDIA, same thing, right? It has AI support. Now, the chip side got hammered this week, right? Like some of the stocks. And if you look at SMH, it doesn't look too bad. And again, like Netflix and Tesla, they got hammered back, like just those two stocks. But the index didn't get dropped that much, right? Same thing here. Like SMH didn't drop much, but if you look at individual stocks that report this week, ASML, this thing got hammered this week. It's down like how much? 8%. And this is a pretty big 270 billion stock, right? That's a lot of money, 8%. And it undercut the whole base. That's the part that I was like, wow, how can it undercut the whole base? This is what I'm talking about. It doesn't matter how tight your base is. If it's going to fail and people don't like it anymore, people want to get out and look at the volume. Bazooka volume. This bubble here, it tells you largest volume since base. So people are getting out of this stock. And then another one was Taiwan Semiconductor. Same thing here. Tight base, right? In fact, it's like a 7-week base here. Boom. It only took the earnings report for it to hit that lower low. It's insane how much selling is happening. Like, this is not normal. And so, for me, again, this is why I'm selling quite a bit of my stocks tomorrow. Although it probably bounced this week, I have no doubt about it. It'll probably bounce a little bit, but I'm more worried about the next few weeks trend, right? I'm not worried about 1, 2 day, 3 day trend. And because all these now are in a downtrend mode, right? Like even like ASML, I like that stock a lot. Now they're in a downtrend mode, and when it's on a downtrend mode, it might take weeks for it to come down. I don't know how far it will come down, whether it'll hit the 200-day or bounce. That's what most people expect, is at least hit the 200-day. If 50-day, this one is already below 50-day. So the next line support is 200-day. And then if we go back to Taiwan Semiconductor, same thing, right? It broke 50-day. So the next line is 200-day. Now, like I said, it could bounce back this week. And if maybe earnings are not going to be that bad. Maybe some of those guys report this week, because there's way more stocks reporting this week. Maybe some of them is going to be like, wow, it's so good, economy is so good, blah, 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 right? But that's what I hope, But I don't want to trade based on hope, So if they do come back, I'll buy it, I have my TSM is not my favorite, so I probably won't buy that. But if I go back to ASML, see, this is another problem. Okay, I'll show you what. I don't even have my trend line drawn here because I don't even. The only reason is because I don't even plan to buy this stock back. No, but I'll draw it just so you can see it. I draw this trend line here. Look at this slope versus this slope here. It's shocking. Why? Because it's dropping like a rock. Look at this 3 times it pulled back. The slope is like not as steep. All of a sudden, it just went like down like a rock. So again, when you see actions like that, this is not normal behavior. And I think I can't remember if it's Mark Minervini or Bill O'Neill. They talk about this. One of them talk about this for sure. You have to understand when it's normal and abnormal behavior. That tells you a lot about the market, what is to come. So to me, this is abnormal behavior. I don't like it. Like that's why like I'm gonna be a little bit more cautious going forward, because of this kind of behavior, right? So anyhow, yeah. So that's that. So I think we look at all the big caps. Just trying to go through my notes here, see what. Yeah, so like I think the other stock we didn't look at IBKR. Oh, IBKR, the earnings wasn't that strong. Yeah, it didn't. It was huge volume trading, but it didn't drop as much as it did. It did recover a little bit. Right here, it hit a low and then it bounced back. So it's still on a downtrend, but it's not like I think part of the reason is because the banks were so strong this week. So it didn't fall as hard as it would have, but overall the action is kind of at best neutral right now. So, yeah. Other stocks that like Halliburton. Okay, we'll talk a little bit about commodities. They like the energy is also more quiet this week. Which is kind of surprising. I thought it would be stronger. But anyhow, Halliburton reported it's still on the uptrend. It dropped on the earnings, but it bounced back right here. So it bounced back. Yeah, it's still on a slight downtrend. And then SLB, Schlumberger, same thing, right? It reported it went down, but then it bounced back. So that's actually a good sign because they did bounce back. It's just not as bullish as we want this week. So, oil price it's not really moving high that much, but again, like see this week it actually closed at the top of that range. So that's really good. But like I say, I was expecting oil stocks to perform better, but it didn't. But at least it didn't tank. It just kind of went lower and bounced back. So that's not too bad. Okay, some of these growth stocks here are breaking down. I don't know if there's news. I wasn't paying attention. Like ELF, not big. It's not like dropping a lot, but it's just starting to drop, right? I don't like that action. Again, whenever it drops, I always like to look at the slope. And now you can see it hasn't broke 21 day ever. This is the first time in a long time, like since right here. So this is a pink line right here. This is the slope, and they broke it. Like, yeah, again, I don't know if there's news, but I don't like this action. Like ELF is one of the steady stock, right? So I don't know what's happening there. Penumbra is a health stock that has done really well. Same thing, like almost look like health. And all of a sudden it just started to slide. Like it's been sliding for over 2 weeks now. It just slide, like, and this is the thing that I'm worried about. Like, maybe some of the stocks, they're not going to tank, but they're just going to keep going down slowly, just like this, right? And so, like, look at this. Like, even though it's slide for 2-3 weeks now, like, it's already halfway to its 200-day line. So that's why I said time could be the other issue, right? Maybe it won't drop as fast, but maybe it'll just keep dropping little. And eventually it'll bounce back. But again, do you want to sit through this correction or what, right? Okay, so those are a couple of stuff that was surprising to me.
Makes sense.
Yeah. Okay. All right. So I think I'm done. Oh yeah, probably the one sector that also pretty strong this week. I'll see if I can find it here. Yeah, like okay, so there's a couple of stocks reported, J&J, right? The health stock, and again, the health hasn't done anything for a while. Like you can see this slope, this trend line and draw. It hasn't done anything for a while. And then all of a sudden this week, it reported and it just went bazooka. Like it just, look at this volume. Like this is the opposite of what we're talking about regarding Netflix and Tesla. This is like the opposite. It's like going up with humongous volume, break out out of this long-term trend line, right? Like something is happening in this sector, right? Johnson & Johnson, right? And then we look at Abbott Laboratory. Same thing. Look at this trend line, even like it's pretty long trend line. Hasn't done anything. Like every time I try to break out, fell. Goes up, fell, right? Look at this. It only took 1 day to, like 1 or 2 days to break out. Like this is the opposite. Like 2 days, it took out how many weeks of action here? You know what I'm saying? This is insane. This is insane. So again, these are all in the same group. Like these are the giant health stocks, right? Something like 200 billion. Like this doesn't happen for no reason. Okay, so these are institutions getting in for whatever reason. I don't know why. Either they think, like, because I said it hasn't done that in months, not just weeks. So what is changing? Something is changing. So anyhow, okay. So there's many other ones. NVO is in a slightly different one. Again, these guys are moving in an uptrend. So you see it closed at the top, right? It closed at the top of the week. Let me see AZN. This one has been correcting. Again, it's not bouncing as strong as the others, but it's closed at the top. Lily, yeah, starting to bounce. Again, it's not as strong, but it's bouncing. And again, they're just following the group right now. ABBV. Okay, so you see, again, it's just one. I don't know. Like this is how many weeks of action? 6 weeks, and it only took probably 1 or 2 days to wipe those range. Vortex. These are all the giants. Here you go. So this one is looking really good. It just broke out really good. This is a cup and handle base. This is one of the elite growth stock. Even though it's a 90 billion cap, like this is one of those guys that can run. Every time it runs like fast. So this could be one of those moments. Okay. Yeah. So like again, health. If we come back to here, health, it's okay. Energy is okay. Industrial. Look at industrials. Still doing pretty good. And yeah, they're doing still pretty good. If we go down, industrials here, lots of stocks here in this group. Yeah, like a lot of them are smaller, so it's less. People don't know their name as much. Like Aeon. This is heating products, building heating products. The building group got a little bit hit this week because of I don't know what it is, but they did get hit this week. But the volume is low. Look at that, super low. That's really good sign. Fix is another building heating product. So again, look at this volume, right? Like those 3 days are not even as high as the 2 days previous to it. So again, this is really good sign. It's a small pullback. It's no low volume. We're gonna see like TGLS. This one again, like this is again, unlike Aeon and FIX, right? You see it drop on higher volume and bounce on lower volume. It's the exact opposite. It has done this before though, right? So the slope is pretty strong. Like it's pretty strong, but it has done that before and able to recover. So we'll see if it like I don't like Friday's close. It closed at the bottom, but it is finding support at the 50-day line right now. Here it broke it, so we'll see if it will break this or not. Because this is probably the best one out of the group. But look at other ones like EXP, Eagle Materials. Okay, so this is still on a nice uptrend. So that still looks good. Hub. Yeah, this is still on a nice uptrend. So you see, none of this broken down. The industrials are really strong right now. You know, PCOR. Let me see PCOR. Yeah, look at this. They're all just still at 45-degree angle. So these stocks are still flying. Perry. Sorry, this one is in the advertising. Commercial service. Okay, so this one kind of fall down a little bit. Higher volume. So this doesn't look as good right now. So at 50-day, we'll see it find support. Yeah, so you know, there's other ones. UFPT. This one I don't own, but I wish I owned this. I think it's still doing pretty good. Yeah, this one has a nice slope trend. It did pull back recently, but then it bounced off. Now it's finding support again. So it looks good. URI. This is also another good one. Yeah, so still on a 45-degree angle. So all these industrial stocks are still looking good. VRT. This one I don't own. There's something about this stock. I think we talked about this. Like, yeah, there's something about this stock. It's just really strong. So this is, you know, closing at the bottom, so that's not good. We'll see if it finds support, if it breaks this or not. So at some point, some of these stocks are gonna correct, and we don't know when. And I'm a little bit worried about, because the Dow has gone up so many days, 10 days, and because this week has so many Dow components reporting. If they miss, it will hit a lot of this small guys. And like, you know, yeah. So let's jump to home builders for a second. Like DHI, I think it reported, right? And this was a weird day because it actually opened up strong and then it reversed. So it's like a mixed picture, right? Like investors couldn't, like, but the next day it didn't follow through, so that's a good news. It actually came back up, right? So the question is home builders done, or are they just, you know, pulling back a little bit? And it looks more like just a temporary pullback, and this is okay. This is the kind of pullback you want to see. Is that it dropped hard, but then it wouldn't follow through, right? That's what you want to see. So this is good. Yeah, but I don't have any home builders. I wish I do. They're all extended right now, but that's why for me, I almost want them to correct a little bit. You know, even go sideways and build a 5-week base or something, or hit the 50-day line or something, right? It just hasn't done that in a while now. So until then, it's hard for me. Like, you know, like here, this would be the last time you would be able to get in at a lower price. But it hasn't come down to 50 days since, so we'll see if it comes down. You know, so far only DHI has reported, but I think this week Pulte Home will be reporting. I know PHM. So yeah, in 2 days. So we'll see, because that it's going to impact the whole group depending on how they report. All right. Okay, let's talk more like about tech and retail. Any questions about any stocks you want to look at first?
I'll let you know in some time.
Okay, so let me jump to retail, because retail is interesting, right? Like the travel area. So let me jump to some of my notes here. Right, like there was an article, revenge travel boom fuels a rally in airline and cruise, right? So let's look at those, right? So okay, UAL. So UAL reported, and it jumped on that news. So that's really good, right? And then it make new high. So this wasn't much of a pullback, unfortunately. Like if you want the proper buy point, you don't really have a base, right? So this is, you know, at most you can buy off this pullback, but again, you know, it's still on a very strong uptrend. DAL is another one. That one reported a week ago, and it did fall on the news, but then again, this week it bounced back. So same thing. There's really not much of a, you know, this is exactly what you want to see. And so, like, you know, we talk about like for example, 1 day, 2 day, and lots of volume. But you see, this is the thing that I don't like, right? Like how the bounce, the volume is so low. Yeah, but Friday's volume is okay. I mean, it make new high on low volume, so I don't like that either. So like, I mean, sometimes it could fool you, right? Like it could, like, you know, go up a few more days thinking it's rebuy and then it drop more. So we gotta be cautious of this, because this is a pretty substantial gain already. So this, you know, and then I'm going to show you American Airlines, right? And this is what happened to American Airlines. It actually dropped. Again, same thing. This one was a strong uptrend, and then when it broke, again, same thing. You can see it hit a new high here. Volume came in, and then volume dry up as it rebound, and then that's exactly like, you know, what I was talking about earlier. Like, and then it just fall really hard. So sometimes it fools you. You think it's rebounding, but it's actually not, right? And now it's like, you know, and this is the scary part. Like lately, at least the last week, I see stocks falling like that so fast. It just, you know, definitely don't buy any extended stock right now. I think this is the moment you do not buy extended stock. Let it, you know, if you miss it, you miss it. But I think because the risk is much higher now, I feel, because they can drop so fast, right? So those are the 3 airlines I follow. And then in terms of the cruise line, they haven't, like, yeah, they're starting to fall back too. Again, I don't know why they're falling back, but the slope trend, you know, 45-degree angle, now they're falling back. It still looks okay. It found support here at the 21 day, and then it's going down really slowly. If we could base, like, you know, if we can build even a 5-week base, I would be super happy, because then then break out, and then I would buy it. And that's what we need. I think we just need stocks to base right now, if they can. So that's Carnival, RCL, similar, look very similar. Very tight on the weekly chart. Looks good. NCLH. This one is, yeah, this one is, you know, kind of going down too. So, but this one actually, yeah, it's 50-day here, 21-day here. So we'll see. If it, you know, I think if it goes down to 50-day, that will be a much better entry level when it bounces on that pullback. So that's what I'm hoping for. If those happen, I don't know if it will happen. Again, and then we start to see also lots of like this week, like I said, retails are under accumulation, which is interesting. Oh no, not that much, a little bit. But some of them, like for example, I'm watching Celgene right now. Celsius, not Celgene. Celsius is so tight, really tight at the top. Again, we just have to, like, you know, I'm not gonna, you know, jump the gun, right? This is again same thing. Not buying extended stock. I'm not gonna jump the gun and try to buy low price, right? I'm gonna wait for a strong, decisive move upward. You know, to tell me, you know, that it's gonna break out of this range, because the problem is that, you know, because of how fast it can fall right now, like, you don't want to get caught. And again, same thing. I would also, like, wait until near, like, closer to middle of day or end of day to buy, because sometimes they will go up and then fool you, and then it goes down by the end of the day. So those are a couple of tips, you know, I do myself to make sure I don't get caught in some kind of, you know, bull trap, right? But yeah, like, you know, same thing here. Like, I don't understand why it was trading so tight, and then all of a sudden it just broke that range. Like, I don't understand that, you know. Even though volume has dried up, but I don't know, something's not right. So, but otherwise it looks really good, this chart. It's just, yeah. DraftKings, like Duolingo. Okay, we'll go back to the DraftKings. Duolingo, it you know, yeah, has this big bad day right here, right there. You know, I can't remember if there was some news. But again, same thing. You see 6 days of trading, and one day it took out all the lows. That's not good. You know, like what's happening? Like why are stocks dropping so fast all of a sudden? Yeah. So some of these are still doing okay. Like on. Let me see. On. Yeah, it's still holding pretty tight. This one is probably one of the few that looks really good. Like high volume breakout, holding tight on lower volume. This is a really good looking chart. Race, this one is pulling back. It's not dropping hard, it's just slowly pulling back, so it's okay. Volume is okay too, so that one's fine. Yeah. Okay, let's look at Uber. Okay. Oops. Why it's not loading? Go to another stock. See if so this one is loading. I don't know why Uber is not loading. Oh, there you go. Okay, so Uber is still doing really good. You can see still riding the 10-day. Still very strong slope. Yeah, this one looks pretty good. Again, same thing with all on. It has 2 days of strong volume. And then the down days are okay. It's almost average, but not too low or not too high. So this one is still looking okay. So retail is okay. Like I mean, like I say, we're starting to see some signs of crack too. Finally, tech. I feel like I said, we saw SMH, right? And then we can look at. Did we look at NVDA? We did. Yeah. So it starts slowly coming down. Friday's volume was significant. I don't know. Oh, maybe there's some rebalancing happening. I know there's rebalancing tomorrow morning, I believe, 24th, right? So there will be some rebalance. I don't know what will happen to the stocks. Yeah, so that's one thing. But yeah, that volume is pretty high because drop. It closed at the bottom, high volume. That's always not a good sign. What was I going to talk about? Yeah, so if we look at software stocks, so we want to look at chip. Like so software is still trying to hold on to the 10-day. Again, largest volume sell-off on Thursday. I don't like that, but and then Friday it rebound, but really low volume, and then it closed at the bottom, so that's also not good. So like if it fall below that, it will easily hit 21-day. So let's jump to some of the stocks like Salesforce pulling back. This one looks okay. Look again. See, this is the difference. The stocks that are doing okay are the ones that have recent high volume bounce, and then on the down days they have really low volume, right? So this one's looking okay. Let me see. Let me look at DDOG. This one is probably yeah. So this one, I don't know. It has a high volume day here too. I'm not sure. Even though it's so tight, but yet it has so high volume. I don't know why. That's weird. DV double verify. This one's still looking okay. Yeah. This one's still looking okay. Security stocks. Some of them are still like FTNT is still trying to hold on. So look at Friday's volume. Holy, all the tech stocks have huge volume on Friday. That's weird. I don't know why. Hubs. Okay, this one doesn't have high volume. This is really low volume, weird. And then on the down day, it has giant volume. So that also not good. MDBE. Okay, so this one has high volume going up and low volume coming down. So that's good. So yeah, so like, you know, you kind of have to assess, like, even though they're all dropping, most of them are dropping now. You just have to kind of see, you know, like when they, if the tech's gonna correct, most of them will correct. But the question is who's gonna drop the least, kind of thing, right? So this is Monday. Again, you see this slope right here looks okay, and then this slope right here looks like terrible. You know, that's why I don't like the technical picture of most tech stocks right now. It just doesn't. I don't know. It's just giving up the gains so fast now. Now it's okay holding the 10-day. So this one, you know, I don't like this high volume reversal. But and then the next day it confirmed that, right? And then it went down. So that's not good. Sometimes you can't tell, right, if it reverses whether it's actually people selling or people buying. But then the next day it confirms it that people are selling. And then look at Palo Alto. Well, this one, you know, have that one bad news from Microsoft trying to compete with them, but then it rebound. And volume has been pretty dry. So that's slightly a good sign. And it still, you know, hasn't come down as fast anymore, except for that one day. So this is, again, like almost like the opposite what you're looking for. Even though it dropped, it dropped really hard on one day. Sometimes one day is okay, but let's say you don't want 2 days for sure. And then it rebound, and then now it dropped again, but it's dropping at a much slower rate than it goes up here. So that's good. So this one might actually be starting to form like a nice consolidation. So hopefully, so this is the 3rd week now. So hopefully, yeah, we'll get a small base in there. So yeah, some of these are looking actually okay. Okay, let's look at SMCI. So this guy is still running. But let's look at the daily chart. So it has this bad day, and then the second day, it undercut the 10-day moving average. This is on Thursday. They actually announced their earnings and guidance, a preliminary one. So they did it before the actual earnings day, and yet and then by the end of the day, it actually recovered. Because in the, I think, let me go look at 15-minute chart. So here it is. So here, it was still dropping, even though they announced their numbers that are better. Okay, they did announce better numbers. But then it recovered slowly throughout the day, and then the next day it recovered a little bit more, and then it dropped again. Yeah, but then yeah, it closed near the bottom. So that's not a good sign. I don't like how it closed near the bottom, but we'll see. It's 3 days really tight. It's kind of in the middle range right now. So I'm not sure who's gonna win this war. We'll see. And that one's interesting. Workday looks okay. Try and hold on to 10-day. So this is another one that has high volume coming. I don't know if it's rebalancing happening or what. I don't know. It might be happening already. Some of them have huge volume. Let's go back to the beginning of the list. I missed some of that. Adobe. This one looks pretty strong. Again, see, Friday high volume. ALGM. Okay. Trying to find support at 10-day. Looks okay. So some of these are okay. Like, you know, again, the key is I don't want to see huge spike in volume on the sell up. ANET is, I think ANET is probably one of the ones that a lot of people are watching right now, because it was the one that has corrected first, and now it's coming back on the right side. And look at Thursday, right? It didn't even touch the 10-day. Volume is okay. Friday, you know, volume dries up. It didn't move much. Still within this base. a lot of people are watching this stock right now. You know, if it breaks out, it could be the next big, you know, run right there. We'll see. So ANET looks okay. ACLS, this one pulling back a little bit. Bill. So you see, a lot of them did this last week, right? Even the strongest tech, they went up and then they reversed. So, but again, this is hard to conclude what will happen next week because they're still on the uptrend, right? So, you know, so again, that's why I think like even though on the daily chart it clearly shows it's pulling back, but again, the uptrend is still intact. The question is it going to bounce? So that's why, like even tomorrow, Monday, could be a telltale sign for the whole week. If it can't find support tomorrow and it breaks through this trend line, and a lot of tech stocks can do the same thing tomorrow if that happens, and that's when you know for sure. You know, because it could still bounce tomorrow. If it bounced, then hey, this is just a 2-3 day kind of thing. But if it doesn't, then and it breaks this trend line, then it's going to have much more to go, right? So yeah, so yeah, so it depends, like you know how much gain you have, whether you want to take your gain or whether you want to hold on and see. You know, some of them you probably want to hold on and see, and then some of them maybe that are weaker you may want to get rid of. Yeah, like one stock of mine reported didn't do very well at SAP, and yeah, this is what happened. You know, this is why earnings season is so crucial, right? Like, you know, I have a substantial gain going into the report, and then it wipe it out just like that. And again, this is why I'm saying this earnings season stocks are reacting really strong. I don't like it. I don't like it. So meaning if you go into the earnings report and you don't have a, if you feel like your stock is already not doing well, and you know, yeah, I think you know, taking some gains or selling some before the report might be good. So this was a, you know, it was doing so well. It was like a nice uptrend right here, and then the earnings report took it down all the way to 50-day. You know, and then Friday it didn't bounce much at all. In fact, this is more selling, even though it ended up closing a little bit higher. But to me, this is like just more people selling. So if it could easily crack this 50-day and go down a lot lower. So that is the scary part, right? So yeah, it could bounce, and if it bounced, then you know you can always buy it back. There's no problem with that. You just don't want to, the risk reward ratio is not in your favor now. It could fall. If it can fall this much, that means it can fall more next week. Like who's to say it won't fall more? Again, right now, we need to see where is the momentum, and the momentum from last week, I found that like since Wednesday, it has really swing hard the other way, and I don't like it. Like I don't like how it swing the other way, like dropping like so hard. You know, so there's something happening, and maybe there's just too many people bullish now, and people, you know, trying to take their profit now, and that's the thing. You know, if people start taking their profit and they start selling, then we'll have a bigger pullback. You know, so you see, some of these stocks have been running for a while. You know, like SAP, they have been running for quite a while now, and then you know, maybe it is time for them to build a bigger base. You know, like this. You know, and it wouldn't even look that bad because it has gone up so much, and now it's time to build a base. So that's why we have to be a little bit cautious. And the other reason is this is second quarter reporting, but really people are looking at Q3 guidance, right? So a lot of people, analysts, are saying Q3 is going to be the worst quarter. So all this guidance that are coming out right now from the earnings report, which is, like I said, Q2 is important but not as important. Q3 is what people are looking at, and if their guidance are weak, they're gonna get dumped because people are already saying it's so bad. Q3 is going to be the lowest. And then Q4 is where people feel like that's when things are going to start to rebound. And so from that perspective, if you believe in that kind of analysis, then probably the market going to correct more this time in anticipation of worse guidance for Q3. And then after they correct, and then like say in a month or two, then they start to look forward, right? Instead of looking at Q3 report, even though that's the next time, 3 months from now, they're going to look at Q3, but really they're going to start seeing Q4 stuff, guidance coming out. And that's when it might go bullish again, right? So, but I don't know. Like, we knew that, like, we have 1 week left of July, right? And so August and September tend to have some mixed, more volatility. There's, usually some pullback of some sort, both August and September. So I'm not sure if it's happening right now already, or like maybe we'll bounce back this week, the last week of July, and then maybe in August we'll see some more pullback again. I don't know, but the idea is like, but some of this action I don't like, and yeah, so it's just give me some cautious, right? What do you think? Yeah. So that's pretty much it for this week.